If you're receiving Social Security, SSI, SSDI, or Medicare, there are several important updates for March 2026 that could affect your payments, your eligibility, or the actions you may need to take. In this update, I'll walk you through the March payment schedule, a key SSI timing issue, earnings limit reminders for those working under full retirement age, Medicare open enrollment deadlines, and several common benefit questions that many retirees are asking right now. Let's begin with the March payment schedule. For most Social Security retirement, survivor, and disability beneficiaries, March follows the normal payment structure. There are no unusual deposit dates for standard retirement or SSDI benefits. However, there is one situation that often causes confusion, and that involves supplemental security income, or SSI. If you receive SSI, your payments are normally issued on the first of the month. When the first falls on a weekend or federal holiday, the payment is sent early, usually on the last business day of the previous month. For March 2026, SSI recipients received their payment at the end of February. That means there will not be a separate SSI deposit in March. This is not a missed payment. It is simply a calendar adjustment. Every year, this timing difference leads to rumors online about double checks. In reality, it is not an extra payment. It is just an early deposit because of the calendar. Now let's talk about an important issue for those under full retirement age who are still working. If you worked last year and earned above the annual earnings limit, Social Security may have withheld one or more monthly checks. What many people do not realize is that the agency may assume you will earn a similar amount this year unless you report a change. If your work situation has changed, for example, you reduced your hours or stopped working, you should contact Social Security and file a work report. Otherwise, your benefits could continue to be withheld based on last year's income. For 2026, if you are under full retirement age, earnings above the annual limit can result in benefits being temporarily withheld. Pension income, investment income, and withdrawals from a 401k do not count toward this earnings limit. Only wages or net self-employment income apply. Now let's shift to Medicare. March 31st marks the end of the Medicare Advantage open enrollment period. If you are currently enrolled in a Medicare Advantage plan, you have until March 31 to make one change to a different Advantage plan if needed. This period applies only to those already in a Medicare Advantage plan. It does not apply to original Medicare unless you are switching from Advantage back to original Medicare. If your premiums increased, your copays changed, or your prescriptions cost more this year, now is the time to review your plan. Medicare Advantage plans renew each year, and even if the company name is the same, the coverage details can change. Staying informed about your plan can help prevent unexpected medical costs later in the year. Another question many people are asking involves overpayment letters. If you receive a notice stating that Social Security overpaid you, do not ignore it. Review it carefully. Overpayments often happen when income changes are not reported in time or when earnings limits are exceeded. You have the right to request a reconsideration if you believe the calculation is incorrect. Acting early gives you more options and helps avoid additional stress. Now let's address a few common benefit questions that many retirees and disabled beneficiaries have raised recently. If you're divorced and were married at least 10 years, you may qualify for benefits on your ex-spouse's record once they reach age 62, even if they have not yet filed for their own benefits. This is known as independently entitled divorced spouse benefits. Your ex-spouse does not need to be receiving benefits, but they must be eligible. If your ex-spouse has passed away and you were married at least 10 years, You may qualify for surviving divorced spouse benefits starting at age 60 or age 50 if you are disabled. For widows and widowers currently receiving SSDI, your disability benefits do not automatically end when you qualify for survivor benefits. In many cases, benefits can be coordinated so you receive the higher total amount allowed under Social Security rules. If you're single and never married, your primary focus should be ensuring your own earnings record is accurate. Your Social Security benefit is calculated using your highest 35 years of earnings. If there are missing or incorrect years, your monthly amount could be lower than it should be. Another important topic involves back payments for SSDI. If you were recently approved after an appeal and received a lump sum, the agency should provide a clear breakdown of how that amount was calculated. If something does not look right, you have the right to request a reconsideration and ask for a full accounting of how the back pay was determined. For those receiving SSDI who are attempting limited work, remember there are protections such as the trial work period and the extended period of eligibility. Small amounts of earnings, especially well below the monthly substantial gainful activity level, typically do not affect benefits. However, always report work activity to avoid future misunderstandings. If you're turning 70 soon and have delayed retirement benefits, it is important to file for Social Security in the month you reach age 70. Delayed retirement credits stop accumulating at that point, so there is no financial advantage in waiting beyond that month. If you are still working and have employer health insurance, Medicare enrollment rules depend on the size of the employer and whether the coverage is considered creditable. Reviewing this before retirement can help you avoid late enrollment penalties. Finally, for anyone receiving a settlement, inheritance, or lottery winnings, regular Social Security retirement and SSDI benefits are not reduced because of personal assets. However, SSI and Medicaid are income and resource-based programs, so large lump sums can affect eligibility. As we move through March 2026, the most important thing to remember is this: most retirees will see no changes to their scheduled retirement or disability payments this month. The key issues involve timing, reporting income changes, and reviewing Medicare options before deadlines pass. If you are unsure about your situation, take time to review your My Social Security account. Check your earnings history, confirm your Medicare coverage, and keep documentation of any changes you report. Social Security rules can feel complex, but staying informed helps you avoid unnecessary problems. When you understand how these systems work, you can make decisions with greater confidence and less stress. We will continue to provide clear, calm updates so you can stay prepared and protected.